Attention veteran homeowners or anybody else who is coming across this training. This does apply to all, but this training is geared specifically towards veterans looking to use their VA streamline refinance or interest rate reduction loan as a tool or vehicle to get themselves out of debt much quicker. Now, lowvarates.com plans on bringing their own customized credit card eliminator calculator to you in the near future. And for the time being, we are using the Federal Reserve's credit card calculator. I mean, just so you know, this is directly from the Federal Reserve's website, yet the Federal Reserve themselves helps prove a point that we are trying to make to veterans across the nation. And that is, statistics show there's two very, very important statistics that you need to realize right now. That is, one, the average American homeowner has about $18,000 worth of debt. Okay, $18,000 worth of debt in credit cards. And also the second piece of information that's important to understand is most veterans and U.S. homeowners move or refinance every 4.1 years. And we've spoken about that in some other video blogs and blog posts on other websites. Nonetheless, $18,000 worth of credit card debt on average, and you're going to either refinance your mortgage or move once every 4.1 years. Now let's assume you have $18,000 worth of credit card debt at an average rate of 19%. What does that tell us? That tells us that if you're just making your minimum payment, it's going to take you about 66 years, okay, 66 years to get out of debt, and you're going to pay about $65,000 in interest. Now, none of us want to be in that situation. So what we suggest you do is, how do I pay off my credit card balance sooner? Well, you're most likely either working with a loan officer or you've thought about refinancing. And as you know, in doing a streamline refinance, you're going to save money every single month, depending on whether or not you go with the brand new hybrid loan that has interest rates below 3.75%, or whether you go with one of our low fixed rate VA loans. Right now we're around 4.5 to 4.75%. Nonetheless, each of those refinances is going to save you money every single month. I just want to assume our average client right now on the hybrid loan is saving around $200+ a month. So right now you're already having to pay $360 a month. You have to pay that or you're in trouble. Add $200 to that. That's what you're going to save with a refinance. Well, if you add $200 to that and make a $560 payment, basically take the $200 a month that we're saving you, add it to your credit cards. Don't go out and blow it in Vegas or do something else with it, but add it to your credit cards and watch what happens. You will pay off your debt in 4 years, down here, as opposed to 66 years, and you'll only pay $7,300 in interest as opposed to $65,000. Now, why anybody would not do this is beyond me. We cannot force you to refinance, but if a streamline interest rate reduction loan is something you've been thinking about doing, and you take one of the brand new VA hybrid loans, they're fixed for 5 years. Okay, for the next 5 years, if you take the $200 a month, could be more, could be less, but if you took the $200 a month that you're saving, not only would you be debt-free within 4 years, you'd still have 1 more year after that with a $200 a month savings, where you can now take that money and either apply it towards your loan or do something else with it. At that point, depending on what the market's doing, you can either see your interest rate tick its way up a little bit or tick its way down. Nonetheless, you're debt-free, and you can look to refinance back into a new loan at that time. I hope this has been beneficial. Please contact an approved loan officer and help get yourself on the path to getting out of debt. Thank you very much.